And apart from a regulatory perspective, are there any particular reasons why banks don't want to enter into this particular asset class? Would you say that trade finance, the assets that companies or SMEs are originating, are they investment grade, or what do you think?
Banks have been hit by regulatory measures, indeed, following the global financial crisis 2008, and this has created an increased focus on the major clients, their major clients, on profitable transactions, so high-value transactions versus lower-value transactions. And the reason mainly is that those regulatory measures have been increasing the cost across the transaction chain. Just to onboard and sign up new clients, the whole KYC due diligence is much more stringent than ever before, which is making indeed the cost rise quickly. When banks are onboarding, they're funding more risky clients, as you say, investment grade versus non-investment grade. The risk level impacts their balance sheets. Yeah. They need to put more reserves aside. There is increased risk-weighted assets, as we call them, which is why it is less profitable for banks to finance those more risky non-investment grade businesses. Now, there are solutions to this, such as the originate and distribute model, which is a best practice implemented by various banks since at least 2 decades on longer term trade. But now we are promoting this practice to short term trade. And this is where technology is required to automate the whole originate to distribute process.